Interest rates are on the rise. First, the Bank of Canada raised rates again today to 1.25%, and then RBC and TD announced they too are raising their interest rates. What does that mean? It means that your mortgage may have just cost you thousands of extra dollars over just the past couple of hours.
As rates go up a quarter percentage point, you're looking at adding $50 to $100 each time they rise, and each time the banks raise their rates. So if you're looking at a half a percentage point, you're looking at a couple of $100 extra in mortgage payments, just with a half a percentage.
All of this while Canadians are grappling with record levels of debt. Recent surveys suggest that many of us are only $200 away from not being able to pay our monthly bills. This hike could be forcing many people out of the housing market.
Also, the new interest rates going up, that's going to eat away on the average person about $100 a month, and it adds up. I mean, people are getting squeezed every possible way right now, and every dollar that they have disposable income, you want them to go out there and spend, but with the advent of all these restrictions, they have less money to spend, and that's not a good thing for the economy.
Restrictions like the new stress test that came into effect only this month, forcing would-be homeowners to qualify at much higher interest rates, reducing the average person's purchasing power by 20%.
We already anticipated that about 5 to 10% of mortgage or home buyers are going to be knocked out of the market with the mortgage stress test. Now you've got rates rising early on in the year. So another 5 to 10% are going to be knocked out of the market. That's anywhere from 10 to 20% of home buyers knocked out of the market in 2018 already.
Even before today's rate hike, the Canadian Real Estate Association slashed its sales forecast for 2018 to predict a 5.3% drop in national sales.
All these economic tightening factors are squeezing the little guy. I mean, we thought we were helping the little guy, but in actual fact, if you're squeezing and squeezing and squeezing, it's getting harder for the average person, and we hope that this is not something that's going to continue, because people, from what I understand, from what I'm reading, are already strapped. They have not much disposable income left after their monthly payments.
Leo cautions that while the Bank of Canada interest rate hike will impact people with variable rates first, it will eventually impact people with fixed rate mortgages as it trickles its way through the system and as people look forward to their renewals.